the show who joins us live from Hong Kong, Mr. Tomo Konishita, represents Nomura, Chief Economist. Tomo, good morning. Thank you for joining us. In simple terms, it is
good morning.
Traders are now selling risky assets, which is commodities, and now they are buying safe haven assets like bond and gold. Do you think the trend is here to stay?
Well, that's a very good question. I think that this impact of tsunami is severe in the short run. So this might affect the commodity market in a sense that because of this tsunami, the people are governments are across the globe now getting cautious on their plan to implement the construction of power plant generation. Then so I think that that might increase demand for the alternative commodity, so alternative energy like gas, fuel, and also others. So this might affect the commodity prices in the medium run.
Mr. Kinoshita, the earthquake indeed has increased the likelihood of BOJ pumping more money into the economy. But how much more can the BOJ aid the money supply at this point?
Well, I think the BOJ has been doing a very good job in a sense that they have already injected a huge liquidity into the Japanese market. It is really understandable because at this crisis or disaster, people tend to have cash in case something happens. So the demand for the economy for cash increases. But on the other hand, another question is whether they can do something on the appreciation of yen or the declining stock prices. I think that the recent measures by BOJ is intended to mitigate these appreciation pressures on yen and also mitigate the pressure to decline the stock prices.
Right. Mr. Kinoshita, Japanese money in last 10 years has fueled many asset classes because Japanese economy currently enjoys a zero interest rate regime. Will that reverse? Because Japanese investors will pull money out from asset classes as they require money to build their economies now.
Well, that's also a big question. I think that generally speaking, the Japanese corporations and individuals understand that the Asia is growing very fast, and they still feel that they need to invest abroad. So I think the overall trend of the investing abroad should not be affected very much. But nonetheless, in the very short run, the companies might need some cash or funds to deal with the crisis at home. So that might result in the repatriation from the overseas operation to back to domestic operation. But I think that should be a very temporary phenomenon.
Mr. Kinoshita, Indian equities have corrected by 11.5% year to date, which is worst after Japan, which is down 15% post just the earthquake. What's the call in India now? Is there further downside from these levels, or do you think now flows would slowly start trickling into economies like India?
Well, this is I understand the feeling of the international investors. Well, but basically the regarding the companies that invest are not really sufficient at the moment, because the companies themselves are rushing to assess the damage or the current situation. So until they have a kind of a clear understanding of the extent of the damage they have had, I think that there is a possibility that the stock market is going to correct further. But on the other hand, I think that over time they will recognize the real extent of the problem, and then if they understand it, they are going to probably buy back the Japanese stocks and other assets. So I think this correction is a temporary phenomenon.
And what's your call on India?
Yes, well, basically, I think that the Indian economy is doing quite well. The inflation is the biggest problem here. I mean, India, but well, the impact of this earthquake in Japan should be very limited, given the low volume of trade between India and Japan. But for India, I think that we are still confident that the government can deal with this high inflation, and we so expect the relatively high economic growth this year.
All right, Mr. Kinoshita, is it time to sell markets like Korea, Taiwan and China, economies which are export driven, and buy markets like India and to a large extent Indonesia, economies which are consumption driven?
That's a good question. Yes, I think that well, I like Indonesia and also the India and other Southeast Asian economies, because simply because we are likely to see a huge increase in middle class population, and the private consumption driven economy is definitely there. But on the other hand, well, I think that China, Taiwan, Korea, those East Asian markets should do still okay, because, well, in the short run, they need to be maybe disrupted by the earthquake in Japan due to the supply constraints. But over time, I'm sure that Japan is going to be on a reconstruction phase, at least by the end of this year. So when the Japanese economy is on a clear recovery track in fourth quarter this year, I think that induced a demand for imports from the neighboring economies. So looking at this year as a whole, I think that there are more good elements than the bad elements.
Do you see fossil fuel prices in the short term moving up, because Japan now needs more power, which means they will import more oil, they will import more natural gas, and they will also import more coal?
Yes, I think that is probably likely. As you know, right now, in Tokyo area, they have to actually ration the electric supply. Power suspension amount, it's going to be probably 3 hours per day for at least for a while. So Japan really needs to increase the electricity generation using the non-nuclear means, and then the answer is coal and gas and other commodities. So I think that in the short run, this earthquake should impact the commodity price, energy prices for the upward correction.